Picture this. Jerome Powell steps up to the mic this month and the Fed finally cuts rates. Crypto volumes explode, Bitcoin pushes into new highs, and suddenly the whole market feels alive again. That's the scenario traders are betting on right now. And the odds of a September rate cut are sitting near 100%, according to the CME FedWatch Tool. Welcome back to Captain Altcoin. Today I want to talk about why the Fed is preparing to ease, how markets are already front-running this move, and what I think it means for crypto going into the end of 2025. Based on what I see, Powell will likely make the announcement on September 17th. So, here's the setup. The Fed has been running tight policy for years now, but the data is finally shifting. Jobs are softening. August payrolls came in at just 22,000. Unemployment ticked up to 4.3%, and prior months were revised lower. Inflation has cooled enough to give Powell some breathing room. Core CPI is running a little above 3%. Headline is sliding toward 2.9%. That's not perfect, but in an election year, it's very hard to justify keeping borrowing costs this high. Political pressure is real. Markets have already chosen their side. Futures are fully pricing a 25 basis point cut in September, with some even whispering about 50. Yields across the curve are drifting lower. Stocks are catching support, the dollar is slipping, and risk assets like gold and Bitcoin are getting bit. I've seen this movie before. In 2020, when the Fed slashed rates and opened the liquidity taps, Bitcoin went from 3K to 33K in under a year. I'm not saying we're about to see that same 10x again, but the playbook feels kind of familiar. Liquidity plus structural scarcity in Bitcoin is a dangerous combo for the bears. Let's talk about that scarcity. Right now, Bitcoin exchange balances have dropped to under 2.8 million coins, down from about 3.3 million in mid-2024. At the same time, US spot Bitcoin ETFs alone hold almost 1.5 million BTC, roughly 7% of total supply. That means every time new money comes in, it's competing for a smaller and smaller pile of liquid coins. So the question is, why isn't Bitcoin already exploding higher? In my view, it's because OGs are still cashing out. Panic sellers are reacting to macro shocks, and the remaining exchange reserves are still just enough to absorb demand. But when those thin out, there's nothing left to slow the move. Here's how I look at it. September could be the trigger point. If Powell doesn't cut, that opens the liquidity channel for corporates and consumers. Risk assets usually outperform in early easing cycles, and crypto thrives when real yields compress. Altcoins are still trading 20 to 30% below local highs. If history rhymes even a little, this window won't last long. I'm not saying go all in. This is not financial advice. Personally, I now hold a big part of my portfolio in stablecoins since I'm waiting to see where the market goes from here. However, I'm just showing you how I'm connecting the dots between policy, liquidity, and supply. Nearly 100% odds of a cut, soft labor, cooling inflation, shrinking exchange balances, that's a cocktail that historically favors crypto. If you want to keep following these big narratives and how they impact your bags, make sure you hit that subscribe button. I'll be breaking down the next Fed meeting and, of course, the impact on Bitcoin and altcoins. I believe patience here could pay off bigger than most expect. We'll see if Powell really does light the next spark.